Then we dig into the point of interest out of inducements. That's where obviously you also can get very easily these points of interest done when you just look where are these inducements traps, or where did they trap the market. Okay, so again, it can be something easy like, okay, you're having your higher highs, and here trapping again some sort of directional shift. Okay, this obviously made people excited about taking this sells in here, because again, could be could be a change of character, but it's not. Right, so again, this is some sort of an inducement of the structure to the left, right? Or again, you're having equal lows in here, getting induced, and this even taps into this other point of interest, right? Or again, if you have a reversal, very easy, obviously, getting some sort of equal highs, getting induced, getting a break of structure in here. Of course, this point of interest is your inducement point of interest, which gets tapped into later, right? How does it look like? Equal highs being formed. Here's your point of imbalance left, right? So guess what? Takes out the liquidity in here, taps into inducement POI. So this becomes your inducement in here because it took out the liquidity. Makes a new low. So technically this made a new high in here. So this technically can be a break of structure in here, right? Guess what? Builds up liquidity, leaves imbalances, builds equal lows, gives you a nice juicy target, grabs the equal lows, equal highs into the point of interest, makes new low. Same thing all over again, right? Equal highs, never been taken out. This obviously took out this point in here, right? Perfect. Okay, equal highs being built, induces equal highs, comes back lower. Okay, awesome. This obviously now can reverse, taps into small point trap, makes all the continuation traders excited, right? But of course, this obviously took out all the inducement targets already. And of course, you can look for reversal trades from there on. And out of sudden, boom, they choop out of there. Okay. But also being very obvious about this one, this is still very watered down. You see of how much more clear we can make the whole thing. We'll show you some other stuff we will include later on, because this is just blanket charts. And it's actually a little bit tricky to identify what they do. And of course, we will show you exactly of how to make it way more clear. Okay, way more clear. But for now, just again, look for these liquidity buildups, channel high side, momentum speed inducing a channel to the high side, taps into valid inducement POI. Again, this one, again, this little push in here, make the high, gets broken, this is your break of structure, comes back, mitigates that, trade away from the inducement. Okay, and of course, taking out the target, perfect, even faking it, target taking out even one more time. Wants to go lower, perfect. Okay, but again, will be 10 times more clear very soon. Right, so same thing, if you have like nice targets in here, takes it out, perfect. Again, the moment it breaks some market structure in here internally, again, very visible, not very visible here. But then again, you trade away from the inducements all the time. But again, said like multiple times, will get very clear very later. Okay, so as the moment I'm losing my spit in my mouth here, Cameron, I want to cover a few more examples as well. So can have some fun with our inducement POIs, because we have a shitload, and you will see of how fun they actually are. Cam, if you want to take over.
Yes, just want to say to start off with, obviously we have a lot of these, but we are still just touching on the basics. This is nothing compared to what we're going to teach you, but this is probably the best way to bring you over to maybe 5 to 10%, if that, just sort of show you what we're going through. So let's get into it. So obviously we can see we have our channel, equal highs, induce that. Lovely. Now we come to the downside. We do the inducement here, and again we channel here. We build these equal highs, give a false reaction, and again take them. So now we've got this channel, we've got this potential inducement point, and we've got this inducement POI that we've already marked up. So this channel's down, we come out of that channel, mitigate the inducement, and then give our order flow entries before continuing down. And obviously, what is our target? Well, it's going to be the triple bottom. And should we ever take a mitigation from here? Absolutely not. That's going to be a smart money trap 99 out of 100 times. Right, next, you can see channel, inducement, and then we come out, fake the triple top. Oh, look, it's going to work. It's going to work. It's going to work. It works until, well, it doesn't. And then obviously we mitigate our imbalance. We fill our imbalance, mitigate our POI, continue higher. So here we have channel, also equal highs for potential target, equal lows. We induce them, we continue higher, and we leave equal highs. Then coming into this, we have our channel. We come out of the channel, fill the imbalance, and mitigate the demand. So then we continue up. Where do we think we continue up to? Well, we're going to take out that one. So next, again, we create our equal lows. We give our inducement. This is a bit more of an advanced one, but you get in immediately on the refill of the inducement. Again, advanced one, you don't have to worry about stuff like this, but we continue higher, take out this high. Lovely. Then again, so here we have our channel. First, we induce high to go low, and then if you look to the left, we build something like this. We've got liquidity over here. Price comes back down, fills our imbalance, and mitigates the inducement before continuing in the intended direction. Are you seeing the pattern again and again and again? So, channel, inducement. We didn't just induce the channel, we induced something to the left. Then we have our break of structure. Here could be your first potential entry, or we could wait for, again, channel into inducement high, mitigation, filling the imbalance, and mitigating this candle. You're seeing it's the same thing again and again and again. So, channel, we induce the channel high, but what do we have? Equal lows. We come down, we induce the equal lows, and then we give our BOS into, again, channel, inducement low, or inducement of the channel, filling the imbalance, and mitigating the candle before obviously continuing high. Where do we go to? Here, of course. That should be our first target. Again, let's get some more in. So here we've got the H1 PO. So we've got our H1 POI. First, we have our smart money trap reaction. Look at what we do coming up into the H1 POI. Are we shocked? No. So we induce the channel into the H1 POI. If you don't want to get in here, that's completely fine. That's a bit more of an advanced one. So what we can do is we can wait for our break of relevant market structure now that we've had an inducement, and we can look to get into this M5. If you look on and this is the M1 view of this like M5 over here. So this was our M5 zone. Again, we can refine even further, and we can take this, or we can again wait for them to build equal lows, showing their hand. We then induce this structure and this channel into this POI, likely with a few other confluences that we'll get into later. And as you can see, this combining the higher time frame with the lower time frame allows you to catch this entire move on H1 with an M1 or M5 entry. So now I'm going to let Sakbar cover some, because I know that she wants to. And yeah, I'll catch you guys in the next one.
So we have another example of the inducement into the POI. We have our channel over here being built both to the buy side and the sell side. And we also have equal highs just before our inducement into the POI over here to the left. Then we also have, again, a break of structure here to the left. And then we have, again, same thing, a POI here to the left. So it's a consecutive order flow type of entry. And then we get, of course, the continuation, taking out all of this liquidity to the left, as well as these equal lows. Next, we have our example here, where we have an inducement of these equal highs also to the left, and as well as the equal lows here. So we have an inducement low first, and then price continues bullish, taking out this channel over here, and then of course an inducement over here to the left, and then we get our continuation bearish. Alongside that, we get this build up over here, we get our mitigation of this imbalance, as well as this minor break of structure, and then a continuation breaking structure here to the left. Same story again, we get the liquidity, the channel build up, price induces low one last time again to the structure of this point over here. We get another channel build up again into this POI over here to the left. So it's an order flow type of entry, and then we get our continuation bearish. Next, we have another example over here where we have equal low and equal high liquidity. So we have our equal lows here, and then price induces into this POI over here. And then of course, equal highs are also remaining, as well as this channel build up. Again, fractal equal highs here too. And then we get our continuation bullish, breaking these structure points to the left, as well as whatever is to the left over there. Then we also have another example. Again, they're all very similar. Some have variations. Here you can see already this also was an inducement. We can see the equal lows over here. So this in itself being an inducement of itself, breaking these structure points, then price reversing. Before it reverses, we get these equal lows, and then price induces into this POI, which also was an inducement. And then we get a continuation, breaking this channel build up, as well as this equal high type of liquidity. Then we have another example of the same thing. We have our equal highs, channel build up from there to there, an inducement high. Again, we still have a channel build up going to the high side. That still remains active until we, of course, induce it. Then we get this channel type of build up there, our inducement low. Again, more liquidity, channel type of build up, trend line, whatever you want to call it. These equal highs building on a fractal level, and then we get our continuation into our inducement over here with all of this imbalance, as you can see. And the price steps into it a few times, creating this fractal liquidity, as well as the lows over here, and then we get our continuation bearish. Same thing is here, we get our trend line build up channel. Again, different ways you can see it, of liquidity to the high side and the low side. But first, price induces high into this imbalance over here. Then we get our continuation, taking out all of these buyers over here. Same thing, another channel. Then we induce this liquidity here into this POI of imbalance. And then we get our continuation with these minor structures as well, and price mitigating into there and breaking out of that zone over there. Now we have another example over here where we have our channel build up down here, price induces it, then we get price break above that zone, and of course more liquidity being built. We get these fractal inducements as well as lows being built, and then price makes this build up over here, as well as a pullback into our POI over here. Remember this being our inducement with all this imbalance, crazy big imbalances, and taking out the liquidity over here. Then we get our break of structure of this point down here. As you can see, we get our mitigation here, and again, more consecutive zones like such, these minor structures being broken to the high side, and our continuation bullish, taking out this structure point over there. Okay, so we have another example over here where we have these equal highs as well as a trend line, whatever type of liquidity we have over there. Again, same thing, equal lows, exactly the same thing. We get our inducement high to come lower, and as we come lower, we get this channel build up over here into our POI down here. Again, lots of imbalance over there. Then we get our continuation, our break of structures to this point. Upon reversal, we have all of this liquidity, trend line stuff, everything, and our mitigation down here, and then our continuation bullish, taking out, of course, the target over here.
Maybe this one. Okay, so let's see what we have in here. Again, easy stuff ever. I think now it's very visible of what they're doing already. channel buildup, momentum, again, not inducing the channel high. So guess what? Inducing low first into what? Into a point of interest with imbalances left. And of course, same thing in this example, left imbalances. Look at what they're doing here, even equal lows in here, perfect. Channel buildup, you see the same stuff over and over in a mini cycle, mini buildup into inducement in here of this channel goes higher. Then of course, being a bigger channel, this bigger channel is getting obviously induced with even a mini channel in there, both not being induced to the upside yet. So guess what? Both induced to the low side into the finally POY. And guess what? We never had inducements high. So that's why we're smashing through the whole thing and even building mini channels in there. So we can obviously understand what's coming next, right? Okay, so with that being said, I think that's enough examples because guess what? We still haven't covered anything yet. It's just like blank charts on like understanding of liquidity of how they induce it,